Let me paint a scenario for you. You take a trade. The trade goes in your direction. You start seeing some opposite candles and you close the trade. You're happy. You're ecstatic. You've got your dopamine hit. Okay? You walk away from the charts. You come back to the charts and realize that if you had held, your trade would have made 3 or 4 more times than what you closed for. Now, the win almost feels like a loss. You're kicking yourself and you're down because you closed the trade too early. Today, I'm going to show you how you can catch the top of a trend change and exit at the right time and catch the whole move. Let's jump into the charts. Okay, so this is from Wednesday, the 17th of April. Okay, now what we're going to do first, and this is what I like to do every single day, the time now is 2 o'clock UK, so it's half an hour before market open. The first thing I'm going to do is go to the 1 hour chart. And what I'm going to do is just zoom out and look at what is happening. Okay, and as you can see, we're on a bearish trend. 5-day MA has crossed over the 20 right there, which signifies that we're in a bearish trend and we are below. Also, one thing to notice is any type of buying has been met with strong selling. Any type of buying met with strong selling. Any type of buying met with strong selling. And what I'm going to do first of all is draw where the liquidity is. So we've got liquidity there and we've got liquidity there. Liquidity is where the market has changed direction rapidly. Okay, so we've got that. We can also draw the ones below. And we've got this one here. And we've got this one here. Okay, so now that the hourly liquidity is there, we can then start to look at the immediate zones that we need to look at, or the levels. And to do that, we're going to go onto the 5-minute chart. So look at the 5-minute chart, and you can see that through the morning we've been going up. So immediate lows that would come to mind would be this one here. So I'm going to draw a horizontal right going to the right. Another low would be here. We can just copy and paste this one, stick it here. And we've got this one. And we've got this one here. Okay. And we've got that liquidity from a few weeks ago. We've also got this high here as well. And you can see that the market has been rejecting. So we're going to mark that as liquidity. Do it from there to there. So the body to the wick. Now, what these serve as, these lines, there's targets. The market can only move into 2 places. That's where there is imbalance, where there is such thing as fair value gaps, or where there is liquidity. So everyone that got in on this move, their stop loss is probably over here somewhere. I also like to draw the latest order block. Now, an order block is the last opposite candle on the move up. So you can draw this one here. And I'll put that in green because we're bullish. Take the border out. And there you go. That is the last order block. So now it's 2 o'clock. Okay. And the market's been rejecting off here. I'm also going to mark this high as well because the liquidity doesn't quite get to here. Doesn't quite get to here on this downtrend. So I'm going to mark this liquidity as well. And that's where there are sellers. So I'm going to mark that red. Okay. So The market opens up. Let's see what happens. It hasn't opened up yet, but this is the 2 o'clock candle. Now, at this point now, all of these people who took on shorts, their stop loss just got hit. Okay? Same as when this happened, these previous people's stop losses got hit, and so on. So let's see how this plays out. Now, I'm going to move my order block as well up to here. Because if we can get below 50% of this order block, I know I can take a trade down to here at least. So the market rejects the liquidity. And we've got some selling happening. Again, now this happens. Okay? So now I can delete this liquidity line. Now at this point now, we've got a bearish order block that's happened. Bearish order block, I can draw that here. There's a green line there, green candle. That's the last green candle before this move down. And I'm going to color that in red. So what I want to see now is the markets come up to here and reject halfway up the order block. We've rejected the 50% line of the bullish one. Let's see if we can reject the bearish one up here. If the market closes above the 50%, I'd probably take calls once we get above here. So this happens now. Now, this candle came up here, tapped the 50% and rejected. Quite high volume. So now I'm going to sell. I'm going to take a sell position right here on that candle. Market goes down. Get a nice move down. And we've broken the bullish order block because we've closed outside 50%. So this is now going to turn into something called a breaker block. Now what happens is when a order block gets disrespected, it will turn into a breaker block. But more importantly, I've got another order block that's happened here, right here. Okay, so what I'm hoping is that this can continue to go down. And it does. Okay, now, at this point now, my trade is £82.50 up. Okay, I've got this order block protecting my trade. My stop loss is always above the 50%. But we've just hit this liquidity, so I'm going to see what happens now. We get a green candle. Now, a lot of people would have closed their trade here at 62%, £62.50. However, if I wait for the market to come up to this order block here and then close, I'm still going to be in profit. No matter what, this is going to be a green trade. So this could have been your target. It broke this target and broke this target, and there's a 15-minute fair value gap here and another one here. So I can understand if you took your trades here, you would have been up £82 on one contract. That is quite a lot of money. However, if you look at the volume is less than the sell-in. This will give me another reason to stay in the trade. Market then goes past both lines and closes just above the 50%. So if you want to take your profits here, not a bad idea. £98, one contract, you're done for the day. On 20 accounts, like the end goal is to be trading, that's 2K. You've just had a 45-minute workday, you're done, okay? However, we now have another breaker block, this green one. So now, my stop loss is anywhere above this 50% line. But I'm expecting buyers because we're at a 15-minute fair value gap. So you can see here the buying, the bears are still in control, but the buying just got soaked up. Then we get another push down. However, we reject and come up straight away. Quite a lot of buying volume. So at this point, I'm thinking I'm 100 up. Shall I close the trade? This would indicate a great place to close the trade. You're up 100 quid on one contract. That's quite a lot. However, the next candle comes and rejects the 50% line of the order block. If you wanted to, if while this was coming up, you could have closed it, it would have been £70 up. That's still an amazing trade. Okay. But when the candle finishes like this, it shows me that halfway up this order block at the 50% line, there is sellers. Look at the size of the wick. The wick is the same size as the body. Then we get a 15-minute fair value gap has appeared. So I've got even more confidence. However, this looks like an order block that's formed, and it has. Now I can move my order block line down to here, and my stop loss is above the 50% again. We continue to go down, and then we get this move. You can see the market came up, rejected the 50% line, and the volume was very low. So now my order block is here. My stop loss is halfway up this line. Now you might say, but this opened up halfway outside the line. The order block you draw once we have pulled away from the green candle. So now is when I would have drawn the order block. So if the market starts coming up here, closes above here, I'm out. My trade now is at 177.50 USD. I didn't take my profits here. I didn't take my profits here. I didn't take my profits here. My next line is down here. Now, £177 on one contract is a huge trade, okay? But let's just see what happens if you'd followed the order block rule. Market comes up, comes all the way back to that 50% again, okay? Now, at this point, trades at 102. You might be kicking yourself for holding on too long. But if you did, it rejects the 50% again. Market then comes back down 144, 141. Again, comes down, continues to come down, continues to come down. And now we have formed another order block right here. Okay. Now my stop loss is again above the 50%. And we close inside this liquidity zone. Okay. The trade now is at £242.50. One contract, and you've held this for 2 hours. If you wanted to close here, that is a fantastic trade. Okay. Close your laptops, go home, go to the gym, go and play golf, go and do some housework. You have just smashed it. A brilliant, brilliant trade. Okay. But let's just see what happens in terms of the order block. We've now got a 15-minute fair value gap inside the order block. And now we've created another order block right here. Okay. Now, this is now a $261 trade. Fantastic trade. And we break the bottom of the liquidity zone. The trade now is 282. I would 100% close now. Okay. Even though we've got this order block here, you have to understand, right? The market has to, and I'm sure this will let me get to the back here, and I'm going to show you the price action on this order block. The market has to get below these guys' orders in order to turn them into liquidity. Because the people that entered calls here, their stop losses are going to be here around probably 550 because they've entered at 562-ish. Okay. So deep inside the liquidity zone, you should most definitely, and if it breaks, you should most definitely take your profits, because what will probably happen now is you probably get a reversal maybe. And eventually we do. Now, we don't have a zone here. So there is no guarantee that this is going to continue down, and we only continue down an extra 8 or 9 points, 7 to, yeah, we continue another 7 points. But this is very risky. The best place to close the trade would have been right here. Okay, we're deep in the zone. I think the trade was 182 up at the time, and you're done for the day. Because even though, now, would you rather, you could have closed the trade here as soon as you started seeing green candles for 80 quid, or being 280 up here using the order block theory. Okay, you missed out on a 7 point move, but that is nothing compared to, you would have closed your trade at 105,101 and missed out up to a 40 point move. You would have missed out 40 points. So would you rather miss out 40 points, or would you rather miss out 7? This is the safest place to trade. Take your profits and get out. Do not worry about all of this. Because when you then end up coming back and you see this happening, there you go. You don't want to get caught up into this. Okay? Hope it helped. Order blocks, fair value gaps, remember the 50% rule.